Hi everyone and welcome to today's morning report on Thursday the 7th of July with me, Richard Perry, market analyst at Handtech Markets. We've got a pretty positive move actually on equity markets this morning. That's come around as a result of the Fed minutes pretty much last night and also a rebound in the oil price. Fed minutes yesterday suggested that the committee, even before the Brexit decision, was obviously concerned about the prospect of what Brexit could do, but also looking at the payrolls data of the last month, and that really spooked them. And it's sort of put them right on the back foot again. So clearly, markets are now sort of that was a dovish shift even before the Brexit decision. So what does that do for monetary policy for the states? Well, it certainly means that we've got to focus on Friday's payrolls report as a number one priority. And that will clearly be a main focus for the markets tomorrow. But that sort of dovish set of minutes has driven a bit of a rebound on Wall Street and helped to drive a bit of a risk recovery, really, with the dollar sort of marginally lower yesterday, a bit sort of mixed today, but the oil price, let me show the oil price, bouncing again off that key support, 45.83, a key low. Twice it's hit that to the pip, or to the tick I should say. Yesterday, just within a handful of ticks, and rallied. But is this a top pattern in the making? Well, with the sort of falling away lower highs, the pressure is still, I think, to the downside. So it'll be interesting to see how this one turns out, because you've got a near-term pivot around 48 to 48.50 pivot area, 50 cents worth. So trading below that, I think the pressure is still on. But you've got a slight rebound in Treasury yields, nothing too significant. 10-year slightly higher, 2-year is higher. So that is again playing into this whole risk recovery on the equity markets. But it's interesting because there still is sort of the safe haven moves are still benefiting. You've got gold price, which is supported today. You've got the yen, which is stronger again. And also sterling, which is higher as well. Now, the interesting fact is that, I've got my chart of the day, which is FTSE 100, and you've got a rally on FTSE 100 today. 1.3, 1.4%. Is it going to last? If sterling is higher, then generally FTSE 100 has been positive when sterling has been weaker. So with sterling rallying, if that rally continues, would the FTSE 100 manage to rally as well? Now, again, it'd be difficult to know how to play that one. But certainly in recent days, you've had a negative correlation between sterling and equity, or the FTSE 100 anyway. But just as we speak, the equity markets are higher and helping to drive a bit of a risk recovery. Now, we have had a couple of other factors on the forex markets. We've had a S&P 500 put the Australian credit rating on negative watch on its AAA rating. So that sort of means the Aussie is slightly underperforming today. The Kiwi is strongly higher, over 1% higher today, and that's come as the RBNZ Spencer has sort of suggested that further interest rate cuts could impact on financial stability. So the markets have taken that as a real positive for the Kiwi, strongly higher today. So bit of a sort of a nuanced move in the forex markets today. So that takes you to the economic data that we've got out today. Well, we've got the UK industrial production at 9:30. It's expected to be 0.5%, so it's still positive, but just obviously lower than last month. But last few months have been a bit sort of up and down on the industrial production, but still it is positive, or would be positive nonetheless. ADP employment report at 1:15. That's expected to be 159. Now, the ADP didn't do a very good job last month of calling that really disastrous payrolls report, that payrolls figure of 38,000. So markets may take a little bit less of a steer off ADP this month. Weekly jobless claims, as ever, at 1:30 on a Thursday, 270,000, so basically in line with where we've seen sort of last week. And finally, the EIA oil inventories report, expected to see another oil inventories drawdown. which would be supportive for the oil price. 2.5 million barrels of drawdown, so negative 2.5, would be a seventh week in a row of drawdown. So that would again help to support the oil price. So takes me to my chart today. Now we had a pretty big reversal signal actually yesterday on FTSE 100. Big bearish engulfing pattern. Didn't come at the high, however you have still got this pattern whereby you sort of initially saw a move above the previous day's high and then a really strong sell-off through the day, closing below the previous day's low. That's a bearish engulfing pattern. You've got a crossover sell signal not yet confirmed on this stochastics. RSI falling away as well, but today's rebound is just basically, all but sort of negated that candle from yesterday. If you saw a move above yesterday's high, that would negate the candle, but it's not happened yet. So there is near-term resistance between 65.20 to 65.80. 65.80 being yesterday's high. If I can get it, there it goes. 65.80. It's just really strong rally at the open, and it's just sort of tailed off a little bit. So it'll be very interesting to see if this continues to play out as a series of low highs, because yesterday's high was a lower high. 65.80 was below 66.12, being the Monday's high. So we are seeing still a succession of lower highs. Now, if that 65.69 turns into another lower high, could it be that we're in the process of building a top pattern? It may be. Now, interestingly enough, yesterday's low held on to the breakout level of 64.27, which was that April high, broke out above that, pulled back to hit 64.32. So that is the level on the downside that you need to watch. 64.27. If you break that on the downside, especially on a closing basis, that would be a negative. But obviously we're sort of 130 ticks away from that at the moment, so it's not yet an issue. And with obviously the strong rally of today, but markets are so choppy still on this in the post-Brexit era, or post-Brexit reaction still. It's very uncertain as to exactly which way the market's going to go, but initially the gains on FTSE are strong, but will they last? And I'm sort of questioning whether with the sterling strength, also with the safe havens still performing, it'll be interesting to see if sterling, if FTSE can last the course in a rally scenario. Obviously, we've still got weakness across the board, in the outlook of the European markets. I mean, DAX and CAC are higher today, but the DAX is still underperforming. So it's very interesting moves that we're seeing on these markets at the moment. So with that in mind, I wish you good luck in your trading on FTSE 100 today, and I'll speak to you later. Thank you.